guys, the most awaited total income question. I had covered all the adjustment, all the format and all tricky adjustment of asked by IC in the exam. So this is our format of total income question. What you have to do, this is given the question net profit as per profit and loss account, and then you had to add some expenses that is already you had debit in your books of accounts, but it is not disallowed. For example, depreciation as per books of account is not allowed. It is allowed as per income tax express section 32. Income tax, if you had paid any income tax expense, it is not allowed in the income tax, but you had allowed in your books of account. If you had paid to any resident without deducting TDS, so you have to disallow 30% of the expenses. So you have to add back 30% and 70% shall be allowed. Any expenditure incurred in respect on which payment is made for goods, services, or facility to a related person. Related person definition I had covered in that PDPBR chapter. To the extent the same is excessive, that excessive part will be disallowed, and rest 70%, 20,000 disallowed out of 70,000. So fair market value of 50,000, and you are paying it to a related person 70,000. So 20,000 will be disallowed here. Any expenditure incurred respect on this payment or aggregate payment to a person, in a day, it doesn't matter that you are paying in one bill, two bills, three bills. Okay, this is a common doubt I am getting right nowadays, that if even if there are two, three bills you are paying in a two, three bill, like one bill of 9,000, one bill of 8,000, one bill of 7,000. If you are making all three payments to a single person in a single day, then all three bills will be disallowed. Okay. And certain sum payable by the asset which has not been paid during the relevant previous year, which of the liability was incurred on or before due date of filing return. There are some charges payable by asset which has not been paid during the, so this one also be disallowed. And some payable by the associate to MSME beyond the time limit of under section MSME Development Act 2006, that 15 days if written agreement is there, and 45 days if there is any written agreement. Okay, if you had not paid to MSME, then that much expense will be disallowed. Any personal expenses you have to disallow here. If they and you have to do proportionately. Okay. Capital expenditure, it is not allowed, but you have to claim depreciation, it is not allowed expense. Repair of capital nature, repair of revenue nature shall be allowed, repair of capital nature is not allowed. Amortization of preliminary expenses, if you had amortized and preliminary expenditure incurred under voluntary retirement scheme, so in which I had explained that amortization only 1/5 is allowed in current year, and it has to do, if there is any regarding voluntary retirement scheme, you have to do it 5 part. What I say will play here, that it will give you 10,000 total amount of all the 5 installment. Okay, then you have to deduct only the 1/5 in current year, that is 2,000. Okay, and rest 4/5 will be disallowed here. Okay, if family planning expenses, it is only allowed to the company SSC. You have to check that that SSC is company or not. If it is not a company, then this family planning expenditure is not allowed. Any fine or penalty paid for infringement, or if you have done any breach of law, doesn't matter it is of GST or income tax. If you have done any breach of law, that is when you are paying fine or penalty for it, it is not allowed. But if it is a penalty for nature damage or delay in compensation of a completion of a contract, then if it is compensatory in nature, then this expense is allowed. But if you have done any breach of law, then it is not allowed. All expenses related to the income which is not taxable under this, for example, municipal taxes. If you had deduct municipal taxes in PGBP profit and loss account, then you have to add back here, and then you have to deduct your HP head. Any sum paid by SCC as an employee by way of contribution to pension scheme exceeding 14% of the salary of the employee, you had learned in ATCCD, and then you have to deduct all the expenditure allowed the deduction. And there are some expenses that will be allowed deduction, but you are not debited. It means you are not treated them as expense in your books of account. For example, you have to add that books of accounts wala depreciation, and you have to deduct that income tax wala depreciation as per section 32. Okay, and then 30% of the expenditure disallowed in earlier previous year, that I had said that you have to disallow that 30% of expenses to if you had paid to any resident without deducting TDS, but it will allow in the assessment in the previous year in which you had paid that TDS to the government. So that 30% of expenditure disallowed in earlier previous year due to non-deduction of tax at source before due date, but allowed in the year of remittance. Okay, this is like under adjustment of that part. Amount disallowed in earlier previous year as per section 43B due to non-payment or before due date. It is allowed a deduction in the year of actual payment. If any amount disallowed in earlier previous year, but because of the and non-payment of before due debt, but it is allowed under deduction when you had actually paid those. Okay, then you have to deduct some income, create a statement of P&L, but it is not taxable. Like there are some income of capital gain or other sources, then you have to deduct from the PGBP income, and you have to add in the respective head. For example, dividend income, agricultural income is exempt always, and you have to like read which are agricultural income or not. Okay, and then interest on security, saving bank, FD tax, it is taxed under income from profit on sale of capital asset. Profit on sale of asset, capital tax under head, capital gain, rent from HP tax under income from house property. You have to deduct first. These all you have to deduct. Winning from lotteries, horses. This one, it is sometimes what I say is there is some net or gross wala. Okay, then if you have to deduct here net amount shall be deducted, and the gross amount shall be and gross amount will be taxable under head other sources. Minus should be net. Okay, net amount shall be minus and gross amount should be added. Gift exempt or taxable under the head I first. Income tax refund. Income tax refund shall not be taxable in any head. If the income from other sources. Okay. Interest on income tax refundable tax under head IFRS. Okay, important adjustment that if income tax refund is you had got, then it is not taxable in any head. But if you have received interest on income tax refund taxable under IFRS, then it will be taxable under IFRS. Then there are some income charges under this head deemed income, even if given additional information has not already been credited. For example, salary remuneration interest received by a partner from the firm to extend to the same, that you have to add these expenses. Okay, bad debt allow a deduction in earlier previous year but now recovered. Recovery of bad debt shall be it will be treated as income. Remission and cessation of trading liability. Okay, so these are you have to add into income, and this is you get your PGBP income. There are some adjustment like in which you get confused in the exam. Like for example, share of profit from HUF is exempt in hands of member. Under section 42, reasonable payment to relative, it is disallowed. Who is covered in relative definition? Spouse, brother, linear ascendant, linear descendant. Family planning expenses are allowed only to a corporate assessee. Interest on income tax refund is taxable under IFRS. Income tax refund is not allowable as expense. Cash payment in excess of 10,000 not allowed for depreciation even on fixed asset. If you had paid for any fixed asset in cash for more than 10,000, and on that amount that depreciation is not allowed. For remaining part in which you had paid from special amount, only that much amount you can get on the depreciation. Medical expenses of father, it is eligible for medical expenses if you incur on father or on self, it is allowed under deduction under section 80D. You have to take deduction there. Okay, then it is allowed. Interest received from partnership. If you have received any interest from partnership, that is partner's PGBP income, not the individual assessee income. If your salary received from for working partner is taxed under PGBP. If salary received from for working partner, it is taxed under head PGBP in the hands of that partner, not in the hands of firm. Share of profit, it is exempt. Rate of interest on TDS, whatever the rate, it is not amended. Okay, please cross check that amendment. But interest on savings, then you can get a deduction under section 80 TTA. If it is a non-senior citizen and it is a resident or non-resident, it doesn't matter. Interest on savings deduction shall be allowed under section 80 TTA. Interest on FD, if you get interest on FD and any interest on savings, then 80 TTP. If you are a senior citizen shall be only resident. Non-resident can never be a senior citizen. Okay, most important. Interest on savings, if question has given you in the net, then you have to gross up and taxable. If interest on FD is net, then you have to gross up and add, and then claim the deduction. Depreciation on computer or printer, 40% depreciation is allowable on computer and printer. Okay, important adjustment, depreciation on computer and printer. PPF paid for own wife minor account, it is eligible for under section 80C, then you have to add these expenses. Interest on PFA, if you have received any interest on PFA, it is exempt. It is not taxable in any other head. If you had received after HV sold, it is taxable under that like unrealized rent wala concept. If you had received any arrear of 10, even if the HP is sold, then it shall be taxable income under head HP, and 30% of standard deduction are allowed under head HP. Donation to PM, if you donation to PM National Relief Fund, it has no limit, 100% deduction is allowed. If you had any speculation business loss can be set off only against speculation and profit, because while you are solving total income equation, there is a provision of set off, clubbing, and all the five facts. Okay, then you have to take in mind, if it question is saying speculation business law, that it is referring you that it's a set of Waller chapter. Okay. Under section 105 BC, under 115 BC, 24B interest on borrowed capital for self-occupied property, it is not allowed. It is allowed only for let out or deemed to let out property. Under 115 BC, no chapter 68 deduction is available except 80cc2, NPS, that is NPS or employer, 80cch Agniveer Corpus Fund, and then LTCJ 112, like these are not amended. These are amended as per L1128, 10% if gain exceeding rupees 1,25,000, and after that 23 July it is 12.5%. Rebate under section 87A not available from LDCG 1128. Okay, speculation business loss can be set off only with speculation profit. Rebate short-term capital loss. Short-term capital loss can be set off only with short-term capital gain and short-term capital gain. But if it is long-term capital gain, then it will not be set off with. If it is long-term capital, if it is long-term capital gain, then it shall not be set off with short-term capital gain. Then this is not allowable. Okay. Most important. And then undisclosed or unexplained income tax at the rate 78% under section 115B. Under section 115 back, HP loss cannot be set off against any other right, and it cannot be carried forward. Most important, in new regime, earlier what happened that HP loss can be carried forward, but now onwards that HP loss cannot be carried forward. You have to set off in current year, and this shall not be carried forward. Interest on gold monetization, board deposit, these are come with like straightforward adjustment. Then what you have to do, you have to just treat the adjustment interest on gold monetization, bonds and deposit, it is exempt. And post office saving interest, most like good adjustment. If exemption is up to earlier for post office saving interest, that is 3,500 per annum for a single person. But if that post office saving account is joint account, then up to 7,000 per annum you can claim the like exemption. But for example, you have got the interest of 12,000, then from other sources that 12,000 minus 3,500 that exemption, and then what you have got 8,500, then you can claim deduction under section 80 TTA of 8,500 or 10,000, whichever is lower. Okay, so this is a good adjustment of that interest from post office saving interest, because what you will wanna do, you shall take the exemption, but you will forget that 80 TTA is also available for post office saving interest. Interest on loan for purchase of fixed asset. If you are taken loan for purchasing of fixed asset and you are paying interest, then that interest till date of put to use, not ready to use, from that put to use, it shall be capitalized and you can claim depreciation, but interest on loan expenses shall not be allowed. And general advertisement expenditure is allowable, but advertisement is, if it is in capital expenditure, then it is not allowed. Then if you have done advertisement in brochure sovereign issued by political party, then advertisement brochure sovereign issued by political party, that this advertisement not allowable. If it is general advertisement, it is allowed, but it is advertisement related to capital expenditure, it is not allowable. Advertisement brochure sovereign, it is not allowed. 80 GGB, it is only for corporate SSC use for advertisement. 80 GGB, it is a deduction if corporate SSC is doing any contribution to a political party, then you can claim the deduction 80 GGB. If 40 payment up to TDS, if you have done any payment to resident without deducting TDS, then 30% of the expenses disallowed. But if you are paying to a non-resident without deducting TDS, then 100% of that expense will be disallowed. Okay. Penalty for contravention of law. If you are doing any penalty for contravention of law, this expense is allowed. But if penalty is normal course of business, like you had not timely filed a GST and all, and if you had done any breach of contract, then these type of expenses allowed. If penalty is compulsory in nature, then it is allowed. Interest for delay. If you have done any you have done late payment of direct tax, income tax, then this interest is disallowed. But if you have done you are paying interest for delay of payment of GST or any other indirect tax, it shall be allowed. ATC, if what question will they see the tuition fees, then maximum up to 2 children you can claim the deduction under section 80C. Okay, maximum 2 children, most important. I say will give you 3 children here. Okay, employees contribution to Toward unpaid, you can claim reduction under section 80 CCD. It shall not exceed 10% of salary basic plus DA and 14% in like recent amendment part amendment in new regime. Amount applicable when 10 A 35 AD 80 JJ 80 DDB 80 RRB deduction shall be allowable. What is AMT? 18.5% of aggregate total income. No special tax rate shall be available here, and plus surcharge 10, 15, 23 taxation plus health and education charges of 4%. Deemed business income. What is deemed business expenses earlier which were allowed and later on record asset bought for scientific research and sold after the research is over. What it is saying that you have done any expenditure and it is allowed as expense, like you had claimed a deduction. Later you had recorded asset and you are using it for scientific research and then you are solding, then this is a deemed business income. And if opening stock considered as expenditure, then if closing stock is treated is like income. For example, like if opening stock is increasing, like your opening stock is undervalued in P&L, and but what the question is saying that your closing stock will be 1 lakh, but in P&L it is showing 80,000. Then it means you have to increase your opening stock by increasing your opening stock by 20,000. By logic, think how the P&L looks like. Left side opening stock, right side closing stock. If closing stock is undervalued, then like it is 80,000, but actual closing stock is 1 lakh, then you have to increase it by 20,000. If you increase the closing side, the right side of the P&L will increase. What will affect? It will increase your pure profit. Then you have to add that undervaluation of closing stock by 20,000, and you have to add in the profit. And if opening stock is undervalued, then if like 80,000 to 1 lakh, then this 20,000, if you're increasing 20,000 opening stock, then in left side the expenditure side will be increased. Then what will happen? Your profit will go down. Okay, it will be treated as expense. Interest on enhanced compensation. I see another adjustment, like you will confuse what is enhanced compensation. It is tax under that IFRS. 50% of fixed expenditure is allowed. Like if you read the word enhanced compensation exam, just take 50% expense allowed and 50% disallowed. Bad debts allowable. Provision for doubtful debts are not allowable. STD, CTD, it is allowable expenses. Short-term like security transaction tax and commodity transaction tax. Insurance stock, if you have done any insurance for stock, it is allowable. Health insurance for employees, it is allowed. But if you have paid a health insurance to employee in cash, then it is not allowed. Business related revenue expenditure. If revenue expenditure is related to business, then it is allowable. Any personal expense not allowable. Specific research carried out by SCC, if SCC had done any specific research, if it is revenue expenditure and capital expenditure, both are allowed under section 35. Research must be related to business. If that research is not related to business, any another, then it is not allowable expense. Okay. Contribution on donation for specific research. If you have done any contribution for specific research, it may or may not be related to business. If you had done any contribution related to donation for specific research, it may or may not be related to business. But if you are doing any research by SSC, then it will be related to the business. But if you are doing any contribution towards specific research, then it is allowed under new regime, under old regime. Under new regime, no contribution, donation of specific research is allowable. Okay, important. I say you used to ask this adjustment. Bonus and commission, it is allowed if it is paid if you have to fulfill the condition of section 43B. Capital expenditure on family planning, it is allowable for 5 years. Capital expenditure, you have to if there is any capital expenditure on family planning, then divide it into five installment. In first year you will allow only one, like we had done the treatment of voluntary retirement scheme, we allowed it 5 part. If capital expenditure is totally allowed in our P&L, then you have to allow only 1/5 and rest 4/5 shall be disallowed as expense. Interest on borrowed capital if used for business purpose. Interest on borrowed capital shall be allowed if it is used for business purpose, but if it is used for personal purpose, then it is not allowed. Interest on capital, it is not allowed. Expenditure or CSI, if you have done any CSI expenditure, it is disallowable expenditure. Under section 35 AD 14 specified businesses are there. Allowable expenditure, no depreciation, 8 years case. 18 new venture, 100% capital expenditure is allowed for land. It is not allowed for good. It is not allowed for financial instrument. Section 35 AD expenditure is not allowed. 35 AD cash expenditure about 10C, 3580 not allowed under section 15 back. 3580 normal tax AMT will be calculated on this. If employee's contribution to PF, it shall be paid within date of return filing, else it will be disallowed. If employee contribution to PF, it shall be paid by the employer up to the date of return, like the 15th of next March. Else it will be disallowed. Disallowable expenditure under 40A income tax advance tax, it is not allowable okay, I see the adjustment. Advance tax is also not allowed. Deduct TDS without deducting TDS less than 30%, non-resident at 100%, and pay TDS to government within due date of ITR. Employees pay tax on employee non-monetary perk. It is and the adjustment. If employee is paying taxes on employees non-monetary perk, for example like motor car and housing and HRA, then if employee paying any taxes, then it is not allowable in PGBP. 40B, firm maximum for 12% capital working for even non-working partner. But remuneration shall only be calculated for working partner. Important adjustment. That remuneration, the calculation of book profit, then we add two items, then deduct one item. That this calculation only for working partner. Non-working partner shall not get the remuneration under income tax. Yeah, that this one. Okay. And then section 48 relative unreasonable payment 35,000 6 GD 35,000 if it is if you are paying to any good transport for good transportation up to 35,000 cash is allowed. Provision for gratuity, it is not allowed if you are paid the gratuity amount in specified gratuity fund, then it is allowed. If it is not specified, then it is not allowed. Employees contribution, if it is fund approved, also covered under section 43B. 43B, expenses allowed on payment basis. I had covered that for section 43B. You are confused so much. First, any taxes, bonus commission, leave salary, and employees contribution to PF, interest to bank, and railways. If you are doing any payment to these 6 persons or for these 6 items, then 43B will be applicable. MSME small and micro aggregate 45 days, or if no agreement 15 days, and then depreciation as per Companies Act, it is disallowed. Agriculture income including P&L shall be excluded from income. It means you have to less. Expenses on issue of right share, it shall also be disallowed under in adjustment. Expenses on issue of right share, it is disallowed. Car purchase shown in P&L debit side. If you have purchased car and it is showing in debit side, I say you used to do this. Okay, you have to disallow. It is a capital expenditure, but you have to deduct depreciation on that car. Municipal taxes with respect to residential flat, if it is let out, then disallow and deduction reduced from PGBP. PPF. PPF interest credited 27,000 and signing back interest is 13,500 from UCO Bank. What you have to done for treatment? For PPF, you have to exclude it from P&L. It means you have to less. That PPF amount you have to less because it is exempt. Interest received from PPF, it is exempt. I had covered in above adjustment. Okay, but if you are receiving interest on saving bank, then it is taxable. This one is taxable. 22,000 is exempt. Okay, interest paid on loan taken for payment of income tax, it is also disallowed. Expenses of expansion of new business and projected which was abundant without creation of new asset. Like if you are doing expansion of new business, like and the previous project were abundant without creation of any asset, that this capital expenditure is disallowed. What this adjustment is saying, like it is like very last asking adjustment. If you are doing any expenses for expansion of new business, like you are opening a new business and you have made any project and you have done so much for that, but you had not create any asset in that business, like that government company in which there is no asset of that company. If you have done these type of expenses and the income tax, these type of capital expenditure is disallowed. That government company type of government. If your payment 50,000 made to fisherman in cash, it is allowed. If payment made to middleman to purchase fish in cash, it is disallowed. And the adjustment. I say make another question on this. If payment you are paying directly to the fisherman in cash up to 50,000, then it is allowed. But if you are paying to middleman to purchase fish, like to the wholesaler or a broker, then this is disallowed. Only fisherman directly, does not fall under section 6DD. Since the amount is more than 10,000, then this is disallowed. Okay, hidden adjustment. Payment made to resident where TDS is deducted but paid after end of financial year. But before due date, there are some payment made to resident where TDS is deducted, but we had paid after the financial year, but we had paid that interest before due date. I see you used to play this like this will it will confuse you that payment is made to resident. TDS is deducted up to financial year, but TDS is not paid up to financial year, but TDS is paid up to like 31st July. TDS is deducted up to 31st March, but you have to deposit up to 31st July. Then if you have done this, both the condition, it is allowed 100% since TDS is deposited before filing. Okay, you have to deduct TDS up to 31st March and you have to like pay TDS up to return filing date. Clubbing pays 1500 per child. Unlimited childs are there. For ATC tuition fees, only 2 children. Okay, remember, अगर like spouse and husband तो दोनों का सब्सटेंशियल इंटरेस्ट फर्म में है, तब जिसकी whoever business income is higher, that without remuneration, whoever income is maximum, then that income will be taxable in that like spouse or husband, whichever income is higher, that child's income is taxable under that head, or exemption is also claimed by that SSC. And if tax on if residential status, if perk received from central government for rendering service outside India, it is not taxable. These perks are not taxable under adjustment. And don't forget to take standard deduction from the salary. You have to. It is not taxable, but don't forget that what you will think that perk is perk received from central government for rendering services. That salary is taxable, but that perk is not taxable. Then from you have to segregate that perk wala part, salary wala part. Then from salary wala part you have to claim 30% standard deduction, and that perk wala part you have to write a note that it is exempt. Okay. Oh, sorry, it is not taxable. I hope I had covered all the adjustment I say in the previous RTP, MTP, PYQ, and ICA module. I had covered all the adjustment with the format. And thank you so much, guys. And let me know in the comment section that which adjustment is new for you, and how it is helpful for you, and share more and more to your friends. It will help them so much, because these are some adjustments which are like not covered. It is covered by teachers, but it is not focused by teachers, but it is asked in PYQ. These are some like adjustment of recent PYQs. Okay, and teachers have not focused on it. So I hope it will so helpful. Thank you so much, guys. Like, share, and subscribe the channel, and comment on the video. Okay.